Hello, everyone. Good morning, good afternoon, and good evening to you all, depending on whichever part of the world you are tuning in from. I'm very thrilled to welcome you to today's Forex Morning Mastery session, as we are going to be kicking off the week on a fresh new note. And I'm excited to dive into the market with you guys and uncover the opportunities that lies ahead. And in that regard, good morning. I see a couple of comments here from Fluoride. Good morning to you. Glad to have you around with us this morning. I see you, Torres Master. It's really been a while. Good morning. And Torres Master is asking that it's been a while. Okay, good. I'm very well, thank you, and trust you're doing very well too. So he says here, what happened till we are having only morning mastery 3 times in a week? I think I have talked about this several times, and one of the major reasons is because of the time constraint I have and how the daily Forex morning mastery has been impacting negatively on my own personal trading account. So I actually needed some time to run through this. And another thing that also made me consider doing it 3 times in a week is due to the activities that happen during the week. So if you look at the Forex Morning Mastery, especially looking at the major assets we usually monitor, you would have noticed that activities always happen Mondays, Wednesdays, and Fridays. Usually we see this volatile move happen on Monday, we see retracement move happen on Tuesday, and then another move happens on Wednesday, and then consolidation happens on Thursday, and then Friday we see another volatile move. So due to this observation and coupled with personal reasons too as well, I decided to collapse the daily Forex Morning Mastery into 3 times in a week, which I think is very, very reasonable. I hope I made myself clear there, Torres Master, and glad to have you with us this morning. So my own name is Sharif Daramola, and for the next 30-40 minutes thereabout, I'm going to be your host as we will be diving into the financial market, looking at the assets we normally monitor during the course of the week, looking at it through the lens of fundamental and price action based analysis. And for this week, we are going to be monitoring the 3 instruments we usually do, and that is the USOILSPOT, the GBPUSD, and of course my favorite asset, which is the XAUUSD. And in fact, I'm very excited to share some simple trading setups that will be helping us navigate the current market dynamics today. I encourage us all to stay tuned in so you don't miss out on these interesting and insightful ideas I have for you this morning. And for those who are joining us for the first time, you are highly welcome on board. Very excited to have you around with us this morning. And I know you will be wondering what this is all about. What is it that we really do here on the Forex Morning Mastery? Well, the Forex Morning Mastery is an idea that was born out of the necessity to do live stream follow-up details on the assets I shared during the weekend. So I usually share a couple of assets during the weekend, giving you a detailed insight into what my plans are for the new week. So I've been doing this for a couple of years now, until lately I decided to do follow-up details where you have the privilege and avenue to ask me questions as regards to those setups and how I think I'm going to be navigating the market dynamic at that point in time. So the Forex Morning Mastery was born, and we run it 3 times in a week: Mondays, Wednesdays, and of course Fridays. And it's also important for you to also note that this is not a signal service platform. Please, I do like yours to understand this. Instead, this platform here is an avenue where we come together to have a deep understanding into the behavioral patterns of market participants in the respective markets we are looking at, using price action based analysis, and of course looking at the fundamental drivers that are influencing the sentiment in the market. And in conjunction with price action based analysis, we can get a well-informed trading decision irrespective of whatever type of trader you are. You could be a day trader, scalper, swing trader, position trader. All we do here, identify areas and structures that we are going to be using for our point of entry, and you can align that with whatever approach you adopt in your own trading lifestyle. So I'm excited to have you join me this morning, and trust me, the more time you spend with us, the better you get to comprehend my analytical approach, which eventually will help you in making your own independent trading decisions. So once again, you are welcome on board, and I encourage you to actively engage in the comment section. You can ask me any questions as regards to the financial market or any of the assets we are looking at for this week. So with that being said, here we will be diving right into the business. I see you, Jonah Aruna. Good morning to you, Jonah Aruna. It's been a while. I saw you here. How are you doing? And how is the family and how is everyone over there? I also see you, Sahid. Good morning to you too. I'm very well, thank you, and trust you're doing very well too. So with that being said, here it's time to pay attention to the upcoming events that will be influencing the market sentiment for today. And of course, you know, it is our daily routine to keep tabs with these fundamental factors in this market. And by looking at the economic calendar, we tend to identify how upcoming event might affect price action, and this helps us spot potential correlations between key economic releases and specific technical patterns on the chart, allowing us to time our positioning more effectively. And so for this week, we have, the economic calendar is actually scanty of high impactful event, especially from the United States, economic. In fact, even the United Kingdom economy docket too as well. But for today, Monday, August 5th, we have only one high impactful event to look out for. And for those of you who saw my weekend video on the XAUUSD, you must have gotten an insight into this. But let's look into what to look out for. So because we have only one high impactful event, I had to take it a step further to include the mid-tier economic features so that we can have a broader view of what majority in the market will be looking forward to guide their trading decisions for today's trading session. Now, the first one here is we are of course going to be looking at the S&P Global publication, which will be giving us, we have the composite PMI here, and of course this data gauges the US private business activity in the manufacturing and service sector. Now, this data is driven by a survey, and we have an index of 0 to 100, where anything below 50 is considered as a contraction in that sector, and anything above 50 is considered as an expansion, which obviously would dovetail to positive traction in favor of the US dollar. Now, looking at the data we have on the chart, it's a mid-tier economic features, which also has the tendency of influencing how market participants will behave today. And if you look at the previous data for the month of July, it came in at 55, which is above the 50 mark, which shows that there is an expansion in that sector. That's a positive signal, if you would ask me. And we have consensus, that is market participants, economists are projecting that the data for the month of July will also come in at 55, just like the previous month, which is something that shows that there is a good positive signal from that particular area. So we will be looking forward to see what the actual data is going to be like today. Is it going to be just as expected, below expectation, or even beyond expectation? And one thing for sure is that if this data comes in higher than market had expected, it has a high tendency of influencing the US dollar dynamic positively. Then the high impactful event we are looking forward to today is the ISM Services PMI. This is a data here. It's considered to be a key economic data that measures the performance of the service sector in the United States. And as I told you earlier, it has an index reading of between 0 to 100, where anything below 50 is considered as a negative and anything above 50 is considered as positive. Now, if we look at the ISM Services PMI, in the last couple of months, it hasn't been doing very well. And of course, the previous month, which is June, came in at 48.8, which was way below the 50 mark, and shows that there is a contraction in that sector. Now, based on what is on ground right now, market participants are expecting that there will be a little bit of expansion there based on what they've seen, based on the survey they've seen in the last 30 days, and they are projecting a 51 for the month of July. So will it come out just as expected, below expectation, or even beyond expectation? And obviously, whatever happens here will influence the US dollar market dynamics. Now, besides the ISM Services PMI and the S&P Global publication, another factor that is going to be influencing the sentiment in the market we are monitoring for this week is the speech from Fed Daly, which is coming up later in the evening. In about 12 to 13 hours from now, we are going to be listening to Federal Reserve Bank of San Francisco's President Mary C. Daly, who is also a voting member of the FOMC committee. So whatever she says today is going to be holding a lot of weight, and majority of market participants want to hear what she has to say, especially in the era where everybody is looking forward to what the Fed is going to be doing as regards to their interest rate. Remember, in the last couple of weeks, the data coming in from the United States hasn't been very impressive at all. Lately, we saw the labor-oriented data, that is the NFP, and the average hourly earning last week Friday coming in way below market had expected, giving us signs that inflation is easing in the United States, which dovetails to a potential interest rate cut as early as the month of September. Now, if we remember what the Fed chairman said during his speech immediately after the interest rate decision last week, he made mention that he did acknowledge that inflation is eased in the United States, but his members, his policymakers, member of the team, still want to see one more labor-oriented data before finally considering cutting interest rate. And lo and behold, we had the labor-oriented data coming on Friday last week, the average hourly earning coming in way below market had expected, and of course the NFP also coming below market had expected. Right now, there is a high leaning towards interest rate cuts in September. If you look at the Fed CME Fed Watch tool, the percentage has increased to 87.6% as of this morning when I checked, which is not a good signal for the US dollar. Now, for those of us who are new, don't understand how the interest rate decision influences the currency assets of that economy, let me simply tell you that when interest rate is high, investors usually bring their capital into that currency so that they can enjoy the differential of the differential interest upon investment. So if you are bringing a currency asset of, let's say, interest rate of about, let's say, 5%, and you are using that currency asset to buy a dollar, which is currently pegged at 5.5%, what this simply means is that you are going to be making that 0.5% variant differential in value as profit if you are investing in the US dollar. Now, if the dollar interest rate is going to drop, then definitely majority want to pull their funds out of that, making their profit quickly before that interest rate decision will happen. And during the course of the weekend, we saw JP Morgan and some other banks, major banks in the United States, adjusting their interest rate to suit to align with the potential interest rate cut as early as the month of September. So all roads leads to an interest rate cut in September, and in fact we want to be listening to what Mary Daly will be saying today to give us an insight into how the members of the committee are thinking at this point in time, which will definitely give the market some signal on how to manage their US dollar portfolio. So this is one event everyone will be looking forward to today. So I encourage us all to mark out the timing so that we can get an insight into what she will say. Of course, I will be giving you highlights when we meet on Wednesday, and of course during my commentary tomorrow morning. Then later in the night, we are going to be looking at another mid-tier economic feature from the United Kingdom, and that is the BRC like-for-like retail sales report, which it measures the changes in the actual value of retail sales from participating companies with invaluable management information on regular and reliable basis. So what this simply means is that the data released by the British Retail Consortium gives us an insight into the performance of the retail sector in the United Kingdom. Now, it is considered that a high reading is seen as positive and could likely be a bullish signal for the pound sterling for this week, and we are obviously going to be looking forward to that data coming in later in the night. And looking at the data here, you will see that the previous month came in at a deficit of 0.5%. So there was a contraction last month, and based on what is on ground right now, economists are projecting that there will be a 0.3% expansion. So that is a positive signal. We're looking forward to see what the actual data will be. So these are the major events we are going to be looking forward to today: the S&P Global publication, the ISM Services PMI, the Fed Daly speech, and of course the like-for-like retail sales report. And of course, we do know that the anticipation of this event has a way of influencing how market participants will behave, which obviously will reflect on the chart as patterns and structures that will be guiding our trading decisions today. So with that being said, let's dive right into the business and let's look at the first asset on our watch list. So the first asset we are going to be looking at this morning is going to be the USOILSPOT. So this is an asset we have been monitoring for a very long time, and one of the major reasons why I do have the USOILSPOT in my portfolio is just a way for me to diversify my risk across different sectors. So I have a portfolio on USOILSPOT, I have on gold, I have on currency assets, which I usually use either GBPUSD or USD/JPY depending on which chart gives me an interesting setup for that particular week. And then finally, in the equity market, I do have the US Tech 100, which is popularly known as the Nasdaq 2 as well. So for the USOILSPOT, last week we had a consolidative situation where we had during the first half of the week, it was more of buying the USOILSPOT, and then during the second half we begin to see this momentum decline, resulting in a strong bearish momentum to the downside. Now, as we prepare for this week, what are the factors behind the scenes that will be influencing the sentiment in this market? You know how we do it, of course. It's important for us to keep tabs with the major market drivers behind the scenes, and then use that information in conjunction with price action based analysis to give a well-informed decision. So as we kick off this new week, the US crude oil prices are facing significant volatility, which is influenced by a mix of geopolitical tensions and economic concerns in the Middle East. And taking all of this into consideration, in fact, I had to break them down into various factors behind the scenes that will be influencing them. Now, let's talk about the geopolitical tensions in the Middle East. Now, the rising supply risk due to the escalating conflict in the Middle East, particularly in Gaza, following an Israeli airstrike, is likely going to be influencing the sentiment in the market. And of course, it's going to be positive for the US oil spot. We all know that when in the era where there is concerns as regards to oil disruption, majority will want to stack up their crude oil reserve during that time, so that if this supply is disrupted, at least they have something to bank on. So this usually increases demand for oil during this time. Then another factor is the regional escalation. Remember, I did mention last week that the Hamas leader was assassinated in Iran, Tehran, last week, which of course has escalated tensions in the Middle East. Now, there is a potential retaliation from Iran and Hamas and Hezbollah against Israel, which everyone do not know when that will happen. United States is suspecting that it's going to happen today, Monday. So we do not know, and this of course has increased tension in the Middle East, which obviously could also influence and increase demand in US oil spots. Then another factor behind the scenes that will influence the US oil spot is the recession fears in the United States. Now, there has been concerns about a potential US recession driven by disappointing US job data and larger than expected contraction in the US manufacturing sector. Last week we saw the ISM manufacturing PMI coming in lower than market had expected. We saw the labor oriented data, that is the NFP, and the average hourly earnings coming in lower than market expectations. So this has triggered some recessions flag in the United States, which could influence the US dollar negatively. And how does this influence the US oil spot? Well, the US oil spot is considered to be a US denominated asset, and whatever happens to the US dollar will rub off on the US oil spot, in the sense that if the dollar is not doing very well, it becomes cheap. Now, for those who are trying to buy US oil spot using other currency asset, will find the dollar cheap enough so they could buy much more oil in that regard. But if the US dollar is high in value, then the US dollar becomes very expensive for other currency assets to buy, and this will decrease the demand for US oil spot. This is another factor here that will be influencing the sentiment in this market. Now, finally, is the OPEC Plus production. We talked about this a couple of months ago, where OPEC and its ally are sticking to their plan to gradually end voluntary production cuts starting in the month of October. That's in about 3 months from now, and with reports indicating an increase in OPEC's oil output in the month of July. Now, if they gradually reduce gradually end their voluntary production cuts, then this will probably increase supply in the market and will probably put exerted pressure, selling pressure on the oil prices. So we have conflicting data here. We have the geopolitical tensions in the Middle East, which favors the US oil spot. We have the potential US recession clamor, which favors the US oil spot. But the OPEC Plus oil production cut reduction right now is something that could counterbalance these motives that we talked about earlier. So how is the market participant digesting this information, and how are they using it to play out in the market? And of course, this we can see on the chart through the lens of price action based technical analysis. Now, going into the chart right now, we can see that since the beginning of the month of July, the market has been considerably bearish, finding series of lower highs and lower lows in the last 4, 5, 6, 7 weeks in this market, giving us a strong bearish move. Now, what I did here was to take into consideration the character of price action in the last 6 weeks, and this was exactly what I was able to come up with. And the first thing you will notice here is the descending channel. I think we talked about this last week. As you will see, if we connect the series of lower highs here, you will see we have a beautiful resistant line for that descending channel. And when we connect the series of lower lows, we have the support line of that descending channel. Then as long as price remains within this descending channel, it makes a lot of sense for us to always consider selling this particular asset. Now, in addition to this descending channel is going to be our key level, which will be serving as a yardstick guiding our trading decisions for this week. Now, for those of you who are new with us in this community, let me quickly mention here our key level is our yardstick for the new week. Now, if price remains above our key level, we want to be looking out for patterns and structures that support the idea of buying, and we are not going to be considering selling unless price action breaks down and finds selling pressure below the key level. Now, my key level for this week is going to be at the $72.50 level. As you will see here, I have my key level here. My key level is always highlighted in pink color, and you can see how this level here has played a significant role in pushing price to the upside in the last couple of months. Look at what happened here in the month of June. This area was a strong buying niche, as we saw it took price to the yearly high at the $84.35 level, and last week we saw price action drop back into that particular area. And look at how beautifully that key level shares a confluence with the support line of that descending channel. Now, my question for the new week is, will price action respect the support line just like it has done in the last couple of weeks? You can see there's a support line of the as descending channel. You can see price has been respected, it pushing price to the upside. And look at what happened here last week Friday. We saw as soon as price got into that structure, we saw buy pressure resume from that area. So the question now is, will price respect that area to push price to the upside, or are we going to see this zone, this beautiful confluence here, broken to the downside to incite a sell-off in this market? So you can see we are at a crucial juncture in the market where, depending on what happens around this area, will determine if we are going to be buying or selling, at least for the first half of this week. So what we are going to be doing right now is to scale down into our execution time frame, right on the 1 hour time frame, where we want to see how market participant has been reacting to this confluence since the beginning of this week. Now, if we scale down into the 1 hour time frame here, you will see we begin to see things much more clearly. And in fact, I already have a sell position triggered at this point in time. As you will see here, let me zoom in so we can see things clearly. So since the week began, it has been more of a bearish note. As you will see, price started the week around the $74.50 level, and since then it has been dropping, finding series of lower lows and lower highs, giving us a range bound structure as at the time I looked at the market this morning. So we have a range bound structure where price was initially confined within the $74.50 area, and of course my key level had the $72.50 level to emphasize the uncertainty around that particular area. Now, with a sell stop order below the key level, I had a sell position triggered. And for those of you who actually took advantage of this opportunity based on our analytical approach here, well done to you. Kudos to you for being on standby on doing that, as you will currently be running with about 80 pips in profit right now. If you are in a sell position on the US All Spot at this juncture, I encourage you to move all stop losses, let's secure this current sell position, maybe at break even, or maybe with a 20 pips stop, 20 pips profit, while we continue to monitor price action around this area. However, for those of you who missed out on this opportunity, let's exercise patience and wait to see if the market will come back to retest the structure. So with a breakdown of the structure at this point, let's see if the market will come back, retest the structure to continue the downtrend move. So we maintain a bearish bias on the US All Spot, at least for the first half of this week, as long as price remains below that key level at the $72.50 area. Remember that key level was a strong demand zone in the month of June, and right now we are seeing a breakdown of that structure. Will this breakdown be a true one, or is it going to be a false one? Time will tell. So if price retraces back, retested it, and we find selling pressure on our lower time frame, let's say the 5, 10 or 15 minutes time frame, then we could actually join that decline to the downside. However, if price climbs back above the key level, we could be seeing buying traction around this area to incite bullish opportunity. So if we continue to see buy pressure above the $72.50 level, then we are back within buyer's territory, which is the demand zone we identified on the higher time frame. And of course, with a buy stop order above the $74.50 level, we can maximize the potential of that bullish move. So let's see how the market is going to play out around this area. Trust me, I will be with you in the comment section of both my Trading View and Telegram platform to give you updates as at when due. So this is my simple view on the US All Spot for today. Let's mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions. Then one more thing here, I also want to capture this descending trend line. I want to capture it so that as long as price remains below those structures, we'll feel very comfortable in this sell position. So I will just thicken it a little bit so that I can emphasize its importance here. So that is that on that one. So I think I need to capture all the pivot highs here. So I think we have something like this. So as long as price remains below this trend line, we feel comfortable in that sell position, and a breakout retest of the trend line will definitely welcome buying opportunities. So if you have any questions, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in, guys. All right. I see your comment. Hello, Wesley Chizenga. Good morning to you. Glad to have you around with us this morning. Trust you're doing very well. And I also see your comment, Sahid. Yes, since morning gold has been playing on jumping castle exactly. We had over 100 pips move to the upside. I actually took advantage of that opportunity, moved my stop loss to about 40 pips, and I got taken out a couple of minutes ago. I saw the movement, and in fact, market is consolidating right now. We're going to be looking at that in a moment, so stay tuned in on that one. And we really understand why the market is doing that. We'll elaborate on that when we get into the XAUUSD. All right. So, in the absence of no questions, I want to assume that we are all on the same page. And please do not forget to click on that like button. It's one way you can actually support this community to grow, and in fact, it also inspires me to do more in that regard. So let's move on to the next asset on our watch list. I do hope you've marked out these levels on the USOILSPOT accordingly, and good, let's move on to the next asset on our watch list. So the next asset we are going to be looking at this morning is going to be the GBPUSD, that is the British pounds against the US dollar. And since the new week has begun, the market has been a little bit choppy. And for those of us who are part of the Forex market prep yesterday evening, we had a sell position triggered. If you are part of that session, and the price really moved down for a while before we saw that rebound happen here. And I'm of the opinion that the market is looking indecisive, especially as they look forward to the ISM services PMI coming up in about 3 to 4 hours from now, and this will likely be giving fresh impetus into this market. Now, before we go into the technical details on this chart, let's run through what has really been going on behind the scenes since last week and what are the likely factors that will be influencing the sentiment in the market this week. Of course, the week has kicked off on an interesting note as the pound sterling faces a mix of factors that will shape its movement in the days ahead, and it's very, very important for us to have a deep understanding into this, understand the implication of these dynamics, and of course see how market participants will be digesting this information. Now, to top the list here is the US dollar weakness, which where the dollar is facing challenges due to rising expectation that the Federal Reserve will be cutting interest rate in the month of September. So for me, the bearish momentum we see here may not likely be for the long run. It could be a short-term opportunity. And for those of you who are part of the market prep yesterday, we talked about this where Sheriff Abdul Kadiri did bring an insight to the table as regards to the bullish momentum, and that selling potentials may not likely stay for too long due to the US dollar weakness at this point in time. So we are going to be looking at that once again. And it's important for us to also take note of the disappointing US economic data. We saw the weak US non-farm payroll last week Friday. We also saw the average hourly earnings, and of course we also saw the weak manufacturing PMI data, which also came in below market expectation, giving us an insight into the contraction in the factory activity in the United States. Then another factor that we're also going to be taking into consideration is the Bank of England interest rate cut decision. Remember last week the Bank of England's decision to cut the rate by 25 basis points last week contributed to challenges for the British pound. But will these challenges continue as especially when we are considering how weak the US dollar is. Will this be an opportunity for the pound sterling to gain some momentum against the US dollar? And another thing that we're also going to consider here is the inflation outlook of the United Kingdom. Last week, the Bank of England governor made remarks that inflation risks are now closer to the 2% target despite the recent rate cut. So let's hope that the recent rate cut will bring some buoyancy into the economy, where people will want to spend more, people want to borrow more money to run their businesses and pay for workers and the likes. Let's hope that this could bring some little bit of liquidity into the market, which could, in the long run, favor the pound sterling. So with all this information we have here, let's go right into the chart and see how market participants have been digesting this information, which obviously will reflect on the chart as price action. So we are going to be starting our analysis on the higher time frame. So I think I started mine on the daily time frame, which is what we did during the market prep yesterday. So right here on the daily time frame, this is what we were able to come up with on the daily time frame after considering the character of price action since the month of April. That's May, June, July, August. So we have about 4 months of historical data, and what we can come up with after taking those data into consideration is that the market is very, very bullish. And after connecting the series of higher lows here, we have a beautiful ascending trend line to work with. Now look at the structure. We have the first pivot right here in the month of April. We have the second pivot close to that area. We have the third pivot here in the month of July. And look at what happened last week, especially after that engulfing bearish momentum. We saw that as soon as price action got into the trend line, for about 12 to 16 hours, the market was finding buy pressure around that trend line. And of course, you know how we treat our ascending trend lines. As long as price remains above the ascending trend line, we have no business selling the GBPUSD. And of course, the only condition that will make us sell is for this trend line to be breached and broken to the downside. But with the way things are going right now, with continued buy pressure around this area, for those of us who took advantage of that sell opportunity this morning, I would encourage us all to move all stop losses to break even. Let's secure this position while we continue to monitor price action around this area. So from what we can get here on the higher time frame, the market is strongly bullish. We have price sitting above our ascending trend line for the last 4 months. At no point in time has price action successfully broken down that trend line. And looking at what we have right now, you can see we are at a beautiful confluence where, depending on how the market reacts to this trend line, will determine if we are going to be continuing the uptrend or probably getting ready to sell. Now, scaling down into the 4 hours time frame, we want to identify structures that will help us navigate this confluence we've identified on this ascending trend line. And if we do that correctly, you will see here that on the 4 hours time frame, the first thing I did observe is that as descending channel, just like what we saw on the USOILSPOT market, we see price connecting the series of lower highs. We have the resistance line of that descending channel, and when we connected the series of lower lows, we have the support line of that descending channel. And during my prep yesterday, I did tell us that we will be selling below the 1.2789, which actually happened this morning. And of course, we saw price move significantly. We saw price move about 78 pips thereabout before that traction came back into this area. So currently, the sell position is running with about 30 pips in profit. And in fact, at this point, I would encourage us all to move all our stop losses to a worst case scenario of break even, just in case we get snapped out of this sell position. So move your stop losses accordingly, secure this current position while we continue to monitor price action around this particular area. Now, Our key level for this week is at the 1.28000 psychological level, an area which has been a strong demand zone for about 4 weeks now. And not until last week Friday we saw that breakdown of that structure, and I'm of the opinion that we could still see bearish momentum happen. As you will see, we have continued selling pressure just exactly at the resistant line of that descending channel, giving us a sign that price may likely be respecting the descending channel to incite the sell-off or the downtrend continuation. So we cannot ignore the potentials that sellers still have a say in this particular market. However, if we consider the fundamental factors behind the scenes, chances are that the pound sterling could capitalize on the weaker US dollar to find new highs this week. And for us to consider buying the GBPUSD, I would rather want to see price break out of both the key level at the 1.28 and that resistant line of that descending channel, where the breakout of the resistant line will be a strong signal that the resistant line here can no longer negate the bullish attempt anymore. So that is the condition I will be looking out to buy the GBPUSD for this week. So please, if you still have your sell position running on the GBPUSD, kindly move your stop losses, secure this position while we exercise patience to see how the market reacts going forward. Now, then another thing before I scale down into the 1 hour time frame, our execution time frame, is the character of this candle. You see here, it's looking more like a hammer candle, which theoretically says that buyers are still very present in this market. Now remember, I told you, for those who are part of the market prep yesterday, I told us all that we are within a strong demand zone, and chances are that buyers could still spring out from this particular area to continue that uptrend that started in the month of July. So we have this uptrend scenario, we have the impulsive leg, and then price retraces back into structure. Then we could likely be seeing that uptrend continuation happen from this area. So this is what I'm looking at. I'm leaning towards a bullish momentum anyways, but if the market says otherwise, we must line up with what the market is saying. So let's scale down into the 1 hour time frame so that we can have an insight into how the market has been reacting to this current structure. Now, scaling down into the 1 hour time frame, that is our execution time frame, this was what I was able to come up with. We had a range bound structure for the first 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 hours before the breakdown of that structure happened. So we had an initial confinement within the 1.28135 and the 1.27785 before that breakdown happened. Now, with the situation we have right now, I've told us all, let's move our stop losses, secure the current sell position while we use this descending trend line. This is the descending trend line for this week, our lower high since the new week has begun. We are going to be using this to guide our trading decisions today. Now, if price action breaks out of this trend line and probably does a retest of structure, I am willing to buy from this particular area and then have a buy stop order sitting above the 1.28135 area to continue the uptrend move. Now look at how the 1.28135 is sitting just exactly above the resistant line of that descending channel. So by the time price breaks out of that resistant line, it would have broken out of that descending trend line, which further emphasized the strength of the buyers at this point. So with the way things are looking like right now, we cannot ignore the potentials that buyers can come into play. So like I said, mark out the structures, most importantly this newly identified trend line, which captures the series of lower highs since the beginning of this week. A breakout retest of this trend line on my 15, 10 or 5 minutes time frame will confirm to me that it's time to join a bullish move. So for the sell position, remember to move your stop losses and secure that one at a worst case break even. So this is my simple view on the GBPUSD for today. Our center of focus is going to be within this whole structure, where depending on the breakout will determine where we are going for today. So if you have any questions, feel free to let me know in the comment section, or if you need some further clarifications as regards to what I just explained so far, please let me know in the comment section. I'm here and willing to be of help in that regard. So I will be taking the next 10-15 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list for today. And I also encourage you to use that time to mark out the structures on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. Stay tuned in, and do not forget to give that video a thumbs up. Thank you very much as you do so. Alright, in the absence of no questions, I want to assume that we are all on the same page. So in that regard, let's move right into the final asset on our watch list for today. So the final asset on our watch list for today is my favorite amongst them, which is the XAUUSD, popularly known as the gold spot. And as we begin the week, gold prices appear to have gained some traction amidst a complex mix of economic and geopolitical factors. And before we go into the details on the XAUUSD, it is time that we quickly take a look at the fundamental factors behind the scenes that will likely be supporting the XAUUSD today. And give me a moment, please. I want to place a buy stop buy order right away on the XAUUSD. We're still within that buy territory I told you about. I capitalized on that bullish move that moved about, how many pips was that? It moved about 200 pips. It moved about 200 pips earlier today, and I moved my stop losses. I got taken out, of course, but right now, with the way things are going, prices still within that demand zone we identified. So I'm going to be placing another buy position, risking that profit I made earlier to see if I can capture a second wave of bullish momentum from here. So I just needed to take that break and do that immediately. So let's go back into the details here. So I already shared a top-down analysis on the XAUUSD during the weekend, and I don't see any need why we want to go into the higher time frame anymore. But if you missed out on that weekend video on the XAUUSD, please check down in the description box below. You'll find a detailed breakdown of how I saw the market from the higher time frame and how I used that structure to navigate the execution time frame, which is our 1 hour time frame. So right here on the XAUUSD, we have an interesting setup gradually unfolding on this chart right now. As you will see, since the new week has begun, price action has been confined within the 2,449 and a $2,415 area, and in fact it has spent most of the time above our key zone, which is between the 2,425 and the 2,420 area, making it a strong demand zone to look out for buying opportunities for this week. Now, what are the fundamental factors behind the scenes? Why do I keep on saying that we want to buy for this week? Well, the market drivers influencing the gold sentiments, most of them are leaning towards a bullish signal. Now, let's start from the softer US dollar, which I did talk about earlier. Following the FOMC dovish stance and disappointing US employment data. This obviously, and of course the disappointing ISM manufacturing PMI data, this obviously is providing support for the gold prices. Then another factor is the US Treasury bond yield, which is currently ongoing downward pressure. And of course, we all know how the US Treasury bond yield is directly proportional in value to the US dollar. So if the US Treasury bond yield is not doing very well, it is expected that the US dollar too will not be doing very well too. And since the US Treasury bond yield is currently lavishing at its lowest point in the last 3 months, I'm of the opinion that it is high time we started looking at buying more of the gold commodity. Then another factor that was likely is influencing the sentiment in the market is the geopolitical tensions in the Middle East, as the rising tension, particularly concerns about potential conflict involving Iran, Hezbollah, will continue to boost appeal for safe haven assets such as the gold. Then today we are going to be looking forward to the US ISM Services PMI, which traders will be looking forward to get fresh impetus into this particular market, and whatever comes out of that data will further emphasize how strong or how weak they want to go in terms of going bullish today. So like I did tell you earlier, let's mark out the timing for the ISM Services PMI. But for those of us who are going to be part of the Go Challenge, you are going to see us how we are going to be navigating that dynamic together as we anticipate the ISM Services PMI today. Then we're also going to be looking forward to some speeches from the Fed official. We talked about Mary Daly, who is a voting member of the FOMC. Whatever she says today too also will be giving us an insight into what is going to be happening as regards to the Fed's interest rate decision. So with all of this said, the path of least resistance for gold is looking very, very bullish. But the problem we are having right now, the dilemma we are facing right now, is what path is it going to take to the upside. Now I want us to see something on the 4 hours time frame once again, so that we can have a clearer picture of what is going on here. Now if you look at the 4 hours time frame here, remember I showed you, if you saw my video you will be familiar with this. I showed you a structure here which is like an ascending channel, and look at the support line of that ascending channel right here. Look at the pivot lows. Look at how price has respected the pivot lows in the last couple of weeks. At no point in time did we see price break down the structure, and even despite the strong profit-taking activity that captured this market last week Friday, price was unable to break down that trend line, which for me could be a platform that could drive another wave of bullish momentum. But one thing I'm not sure about is the route through which is going to take to the upside. We already confirmed that the path of least resistance is looking bullish, but it could take another route in the sense that it could break down the trend line and key level to maybe somewhere around the 2,370 before it continues that uptrend. That is a possibility that I would not like us to ignore at all, especially after noticing the shooting star candle during the early hours of this week's trading session, which could incite a sell-off to the downside. So we are not going to ignore that potential, and for us to sell, I would want to see price break through the 2,425 and that support line to join a bearish move. But if that does not happen and price continues to remain above this confluence, we will feel comfortable in the buy position. Now let's scale back down into the 1 hour time frame. I just needed to show you what things are looking at right there. Now for us to sell, I would want to see price break through the 2,415. Now that's the only condition that will make me sell. Break through the 2,415, and if we can see some selling pressure below the structure, this could give us some confirmation to join a decline to the downside. And if we are selling below the 2,415, we want to be having our stop losses way above the trend line and that key level at the 2,425, which is dovetailing to about 130 to 150 pips thereabout. So it's more like a swing trading approach, if you would ask me. But if you want to scalp the market with me, join the Go Challenge, where we will be doing that together. Now at this point in time, as long as price still remains above the structure, I maintain a bullish bias. Look at this. buy pressure. Right now we're noticing some buy pressure happen here again. Now if price continues to climb, then we're having another buy stop order above the resistance line here at a 2,449 to capitalize on that uptrend continuation. We also have another one at the highest point for this year at a 2,484 to maximize the potential of that bullish move. So this is how we are going to be managing the XAUUSD today. We are at a crucial juncture here where price action has been oscillating within our key levels since the beginning of the week, which for me, I'm still holding a bullish bias unless the 2,415 is breached and broken to the downside. So this is my simple view on the XAUUSD today. I hope I made myself very clear. So let's see how the market will play out in the next couple of hours, and I will definitely be giving us updates on both my TradingView and Telegram platform. So if you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10-15 seconds off. Let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. And do not forget to give that video a thumbs up. Your likes are valuable to me, and of course it also helps the algorithm promote the video to a wider audience of traders who may find the content beneficial to them. And thank you very much for your support. And for those of you who had clicked on the like button, you guys are wonderful. I really do appreciate from the bottom of my heart. So see you in about 10-15 seconds from now, after which we will be rounding off if there are no questions. Thank you. Okay, so I see you 204.25 breakout is good to buy. I think I explained that earlier. Saeed, I guess you are not around. I said we are within buyer's territory right now. So when you are within buyer's territory, it's high time you are buying, of course. We are buying territory. This is buy territory between 2,420 and 2,425 is good for buyers at this particular point in time. So we are within buyer's territory, of course. I did mention that earlier. And the only condition that will make us sell is for the 2,415 to be broken to the downside. If that is not the case and price continues to maintain above the structures, it's a very good territory for us to look out for buying opportunities. I hope I made myself clear there. Sahid. So in the absence of no further questions, I'm of the opinion that we are all on the same page now, and it is high time we call it a day on the Forex Morning Mastery. In fact, the Go Challenge sessions should have started by now. I'm already running into the time for the Go Challenge. So it has been a wonderful moment with you guys this morning. I really appreciate every single one of you. You guys are wonderful. Okay, you're welcome. Sahid, love you too, man. All right, so we're able to attend to all the three financial instruments on our watch list today. We talked about the GBPUSD, we talked about the XAUUSD, and of course the USOILSPOT, where we were able to identify simple trading setups that will be guiding our trading decisions for today. And I do hope you are able to mark out the structures accordingly on your chart. If you have done so, well done and kudos to you. All we need to do right now is exercise patience and allow the structures to mature. And always remember, every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you do want to be having a well-defined risk management strategy in place to mitigate against such development. And for those who joined us for the first time today, I do hope you are able to gain one or two things from what we discussed here today. And if you did, you want to be part of our subsequent editions. So I look forward to seeing more of you. Wednesday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well this asset have been doing and of course prepare for the midweek trading session. So it's on this note, I would like to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.